Because we started investing here 2005, and we were like, you look at China and you saw the growth, you say there's 1 billion people here, you'll see the same thing, and they skip the internet generation.
What's scary is that you've got, when it explodes, you have no access from anywhere else. There's no infrastructure to support anything. So the only access anyone has is through the mobile device or whatever technology comes after that. The opportunity to create businesses that could completely disrupt a country, forget industries.
Because you have a clean slate. You have no brands here, you have no infrastructure. Everything's from scratch, but yet you can build the whole thing on a phone. It's just, you have endless opportunity.
India, as opposed to other markets, just the only answer here is technology. Like, the problems are so large and severe, and if you think about it, it's so fragmented in such a challenging environment that, it's not going to get solved the way it did in America. So, in America, it's quite easy. When you had Amazon come about, Walmart, Barnes & Noble, Borders had already solved the supply chain. I mean, before that, urbanization had taken place. Before that, per capita income had grown. So all this stuff had happened. Amazon came around and just put technology on top, made it easy. In India, everything's already so chaotic and broken. You're having the growth in per capita income at the same time that organization is happening, at the same time that urbanization is taking place, and at the same time the technology is penetrating. So the reality is here, the path and the trajectory is going to look very different.
One of the questions we have to think about, and we started chatting about yesterday, is that you've got a handful of folks who've raised a boatload of cash, and yet the field is wide open when we think about a lot of the different verticals.
The fifth shift that's happening in parallel in all of this is business model changes. Right? So suddenly you start to say, I don't need to buy stuff anymore, I'll rent stuff. I don't need to own it forever. I can have it for a while, use it. I don't need to own a car. I just have a car when I need it. So that element means that the broad-based channels will operate in a certain manner. And they have to solve for breadth, right? And so they're solving on a singular business model plan. So if we can find the brand that operates in a vertical that has the capacity to either shift its business model in some way and move from whether it used to be consumed on a per user basis and now gets consumed on a just mass license basis, or whether it's a product purchase that now goes to subscription, or if it's discovery as opposed to straight search. I think that becomes, then we have a chance to really dominate by owning the brand and not being beholden to distribution.
When we started asking investors at that time, will you invest? Everyone said, well, we want to see revenue. People don't make money in this industry. We want to see that. And then you start thinking, oh my God, well, we have to go down that road. We're not going to be able to raise the next round. I was reading this article, actually, the day before yesterday, saying that Tesla is the only company to reach X billion dollars in valuation that hasn't disrupted a market.
Stage tech stuff also driven to exits. I think once you start seeing a lot more, product driven, technology driven exits, I think people will start paying a little more attention to that than hitting the monthly run rate number.
Yeah,
you'll see greater innovation happening, greater investment in that happening.
We have a long.
We've gone through this. It's funny that we're talking about this right now because we spent 2 years going through this conversation with a company ourselves, where we weren't sure whether they needed to go the revenue route or the user route. Then we argued about it amongst ourselves, and
we still are.
Fantastic.